Welcome back. All right, let's talk about the state of the economy. Just today, government officials confirm in a report that the economy shrank in the first half of the year. On the other hand, the number of people seeking unemployment benefits is at a 5-month low. And of course, inflation remains high. So how do we analyze all of these indicators? How do we know when an economy is in a recession? Joining me now is financial expert Clark Kendall. Clark, thanks for being up with us tonight.
Oh, thank you for having me this evening.
All right, Clark, so let's kind of get down to it. What do you make of all of these indicators? Are we in a recession right now?
Well, it's a bifurcated market right now. The academic definition of a recession is two quarters of decline in GDP and also severe economic slowdown. But as you pointed out, we only have an unemployment rate of 3.6, 3.7%. And thus far this year, corporate revenues and earnings are still growing. So we have bifurcated indicators that's quite frankly confusing the financial markets.
Yeah, I mean, given the strength of the job market, a lot of people are saying that we're not in a recession. Inflation remains high. It's at its highest level in 4 decades, although we're seeing some gas prices come down. Some other prices are also dropping. But Americans' purchasing power seems to be eroding. I know Fed Chair Jerome Powell has said that the central bank will continue raising interest rates as high as needed to bring inflation down to 2%. How do you think all of that is playing into this?
Well, you're right. As I said, it's a bifurcated indicators. Unemployment and also the CPI tend to be lagging market indicators. Yet on the leading market indicators, we've actually had, core inflation such as raw materials, oats, groceries are actually starting to come down. As the picture just pointed out, we've actually have gasoline prices come down. From the big picture, let's stop and take a breath. 2020, we had a pandemic, and the government sent checks home to people to not go to work, and it kept our country off the food lines. And then once everyone was vaccinated, the Federal Reserve lowered interest rates to get people back to work. And Jerome Powell, the Federal Reserve, said last year, we had the Fed funds rate at 0.25%. We've got more than just transitory inflation. We need to bring us back to financial normacy in the marketplace. And he has brought it back. He's brought it back very quickly. He's raised the Fed funds from 0.25% to now 3.25%.
Yeah.
It's been quick. It's been fast. Interest rates now are the highest they've been in over 15 years. So we're digesting, the financial markets are digesting what's going on in this economy.
Bottom line, a lot of people are hurting in this country one way or another. However, consumer spending seems to be continuing. What are some indicators, though? There are these fears that we might be heading into a recession. What kind of signs do we need to be looking out for?
Well, I think, as I said, we got to take a deep breath. I don't know if, we should try to guess or we're going into a recession. And quite frankly, my academic definition of a recession and a depression is a recession is when your neighbor's out of work. A depression's when you're out of work. I think we need to simply go through managing the cards that has been dealt to us. If you haven't owned fixed income, or if you did own fixed income, you're down on average about 15% this year. It's actually, there's opportunities in the fixed income markets. 2-3-year treasuries now are at 4.25%.
Yeah.
Same with the CD market. I think many, as we refer to middle class millionaires, try to guess where the market's going to go. I think we need to manage the market. If you've got a good job, keep it. If you've got a 3% mortgage that you got last year, don't pay it off quickly. Use the market fluctuation and what we're going through as opportunities, but don't try to guess where interest rates are going to go short term, where the economy is going to go. I think what you need to do is manage your own finance to take advantage, quite frankly, of the economic cards that have been dealt.
Exactly. Either way, it's going to cause a lot of anxiety if you do. So, Clark Kendall, thank you for your expertise. Thanks so much.
Thank you for having me on this evening.